traders, and welcome to 2025. Okay, so most traders around the world are starting to come back to their desks now. So this week actually marks the first week of trading really for 2025. Okay, so the market and I guess the rest of the world, what they are looking forward to in the immediate future that's going to move markets is obviously what happens on the 20th of January is when Trump is inaugurated and Trump starts his first day of work. So that's only a couple of weeks away, so we're getting very close. Okay, so Trump has been two things. One, he's been very vocal about his policies, and two, he's also been very vocal about exactly when he's going to introduce those policies, and he's pretty much told everyone from day one. So we don't have too long to wait to find out exactly what that looks like. Okay, but the first policy, and the one that is obviously is going to move markets the most, is what happens with tariffs. So look, there's a few countries that are going to get the worst of the tariffs. Firstly, it's the US's closest neighbours, and that's Mexico and Canada. Trump said that he is going to impose tariffs anywhere between maybe 25%, maybe even as high as 40%, until both his neighbours get their borders in order with the US. So, firstly, yes, Canada, Mexico are looking to get some big tariffs, but the biggest tariffs obviously are going to come to China. And Trump is looking at potentially making those tariffs as high as 60%. So no doubt in the next couple of weeks we will see a trade war with China start. Now, this policy is actually, it's a negative for markets. Firstly, if we take the US, any time that you put tariffs on goods coming into the country, that is probably one of the fastest ways to obviously increase the price of those goods and also increase inflation. So end of last year in the US, the last quarter, we actually saw headline inflation, bottom in October. It printed 2.4% year on year in October in the US. In November, that marginally went up to 2.6%. And then in December, the last inflation print we saw, it went marginally up again to 2.7%. So what we're seeing in the US in the last quarter is that we're seeing inflation even before Trump enacts these tariffs has marginally gone up. So no doubt the market will not want to see that inflation again spikes up from these levels and potentially starts going back above 3%. So we also did have a Federal Reserve meeting at the end of last year where they did cut rates one last time, 25 basis points to make the Fed's fund rate at 4.25%. But the Fed gave us a very hawkish cut where now the Fed is very much not wanting to cut rates. The bar is set very high for them to cut rates now going into this year, 2025. And certainly they could be on the sidelines for an extended period. So this tariff policy for the US and also for the rest of the world, because obviously what happens with the Fed is very important for every central bank globally. It's going to be a negative, no doubt, for the US and globally. Now for China, obviously the tariffs and the trade war with China is something that's a big negative, especially at the time when the Chinese economy is struggling as much as it is. We're obviously seeing a big downturn in the property market and economic growth, and so China certainly does not need to have a trade war with the US. And what we're seeing at the moment in the markets, especially with Chinese currency, so dollar China, is at multi-year highs at the moment. We've just gone through recently 7.33 is a big technical level. We're trading at 7.35, and literally there's a resistance level just above market where it is at the moment, around the 3.7, before literally it gaps away higher. So one of the things that this policy certainly has already had effect on is depreciating the Chinese yuan, and we're seeing a big spike higher in dollar China. Some of the analysts are looking at potentially that this in the near term could even go as high as 7.5, but further out, depending on how this all works out, some analysts are even looking at potentially targets somewhere this year up towards 8. Now, this stronger US dollar against the CNY and Chinese currency depreciating certainly then puts a lot of pressure on all the other Asian currencies. So that is something certainly to watch out for. Certainly in the last time Trump was in office and he had a trade war with China, the Chinese equity market did not do well. So I would imagine that I would not be rushing to buy Chinese equities. So the Shanghai comp, I imagine, is probably going to be weighed down by what's about to happen in the next couple of weeks, and consequently also whether or not you're trading Hang Seng, that may struggle as well, and H shares on the Hong Kong Stock Exchange. Okay, so good luck with your trading this year, and we will check back in again with you shortly.